Thanks for joining us on Business Incorporated. Good afternoon. I'm Chimeze Obi Iwago. Coming up on the program, the 51st World Economic Forum begins today with the aim to reset global economic relations. UN warns that global foreign direct investment flows are set to go through a U-shaped recovery, staying weak in 2021. And US to impose South Africa travel ban to combat new COVID-19 variant. Let's get the show started now with the markets numbers, and we begin this week's show with intraday market numbers from the African continent, which were mostly positive. The JSE index in South Africa soared by 1.56%, while Nigeria's main index reversed last week's negative trend and was up 0.04%. Only the EGX 30 posted declines at intraday by 0.06%. Kenya ended Friday's session negative. It was a similar picture in the Middle East, where major markets were positive except the Qatari index, which declined 0.33% at intraday. On the flip side, Saudi Arabia's main index advanced to 0.35%. In the UAE, Dubai's index rose 0.27%, while the Abu Dhabi index was 0.08% higher. Let's cross over now to Europe. Stocks opened higher today as investors around the world keep an eye on developments on the coronavirus pandemic and plans for U.S. stimulus measures. Ashutosh Pandey is on board today, standing there at the Frankfurt Stock Exchange. Hello, Ashutosh. Good to see you. Good afternoon.
Hello, Jimmy. Thanks for having me.
So the European recovery is faltering as governments tighten restrictions to curb the coronavirus. Now, this week, major European countries will release their GDP figures for the last quarter. What can we expect?
Well, to begin with, it's going to be a busy week. There is a lot of economic data that is expected this week, starting with this GDP figures from Germany, Spain, France, Austria, Belgium. All of these major economies are coming out with their GDP figures for the fourth quarter. Germany is expected to just manage to avoid a contraction. That's because of strong performance in its manufacturing sector, which remained largely opened even during the lockdowns. But the others are not that lucky. France, Spain, and Austria all are expected to post a contraction in quarter four. But having said that, all this is now would be like the backward looking data, and the markets would not be too perturbed about what was the figures there, but they are more looking at what's going to come ahead. And going forward, it's the outlook from the IMF, the World Economic Outlook. They are going to it's yet not known, but what people are expecting is that perhaps they'll have to trim their outlook from what they projected in October. That's because there is now expectation of a double-dip recession in the Eurozone, in the UK, in Japan. And the World Bank has already trimmed its outlook for this year. So that's one of the things. Even Germany is expected to perhaps trim its outlook for this year to around 3% from earlier 4.4%.
No doubt it's a busy week for business. Well, the World Economic Forum kicks off today, not in Davos though, but online. What are the main talking points of this year's summit?
Well, there's no surprises there. It's about coronavirus and climate change. The coronavirus pandemic has led to millions of people losing their jobs. It has deepened social inequalities, economic inequalities, regional inequalities. Now, the event is actually aiming to get all stakeholders together and debate a recovery which is robust, which is inclusive, which is green going forward. So that's one of the things. Then the other aspect is about rebuilding trust. That's the main theme of this year's Davos meeting. We've seen that during the pandemic, a lot of trust has broken. There's been countries that have actually erected barriers to trade. They've hoarded food supplies. They've hoarded medical equipment, and now is the time for all countries to come together. That's what the event is hoping for. And there is a long list of major speakers there, and it starts with the speech by Chinese President Xi Jinping, who who just spoke a few minutes back, and he spoke about multilateralism. He warned against decoupling, and he also actually set in the agenda for how China is planning to fight climate change, how it can support in the global recovery process, how it can contribute in the fight against the pandemic, given its own experience. He was definitely the main speaker today, but going forward, we expect to hear from German Chancellor Merkel, French President Macron, then Indian Prime Minister Narendra Modi. So it's quite a stellar event going forward.
And talking about China, China has overtaken the U.S. as the world's leading destination for foreign direct investment. How did China manage to trump the U.S.?
Well, it's a lot to do with how it dealt with the pandemic. And if you see the difference between both the countries, take, for example, China, they managed to come out of the pandemic fairly quickly. The economy started running. And at the same time, U.S. is still struggling to actually control the pandemic. And that's the reason why they are seeing a slump in their output. And this was reflected in also the investments, where the U.S. FDI fell 49% compared to a 4% rise in China. So, basically, U.S.'s plight is what the entire developed world mostly felt. The Europe FDI in Europe also fell by 2/3. Clearly, it seems that investors at this point of time are not really ready to commit a lot of funds in projects abroad, given all the uncertainties around.
Right. A busy week, Ashutosh, so let's keep an eye on all these developing events, the World Economic Forum, the data that is being expected, and of course we have a lot to chew in the course of the week. Enjoy the rest of the day. And talking about the World Economic Forum, the 51st World Economic Forum, of course, begins today and is themed a crucial year to rebuild trust, building on the Great Reset that web founder Klaus Schwab had Prince Charles launched in 2021. The Great Reset is aimed at getting global inclusive growth back on track as the COVID-19 pandemic has killed over 2 million people, with the associated national lockdowns having a devastating effect on economic activity. The web's vision of a Great Reset recognizes that what is needed to tackle global crisis is a coordinated, concerted global response that needs to be underpinned by a mission to change society so as to make it more equitable, inclusive and cohesive. This year's event, of course, is taking place virtually because of the COVID-19 pandemic and not at the normal venue of the Davos SK Resort in Switzerland. And of course, still looking at the markets, and stocks in major Asian Pacific markets were higher today as investors continued to monitor the situation surrounding the coronavirus pandemic. Hong Kong's Hang Seng Index led gains among the region's major markets as it rose 2.41% to close at 30,159.01, while South Korea's Kospi also saw robust gains as they closed 2.18% higher. Mainland Chinese stocks also rose on the day. The Shanghai Composite was 0.48% higher at 3,624 points, while the Shenzhen Component advanced 0.521%. In Japan, the Nikkei 225 nudged 0.67% higher to close at 28,822 points, while the Topix Index gained 0.29% to finish its trading day at 1,862. Shares in Australia edged higher on the day, with the S&P ASX 200 up 0.36%. And in the U.S., stock index futures rose in early morning trading as Wall Street prepares for the busiest week of earnings, which will include reports from some of the largest tech companies. Our futures contracts tied to the Dow Jones Industrial Average gained 27 points. S&P 500 futures and Nasdaq 100 futures also both traded in positive territory. Stocks finished mixed on Friday, with S&P 500 and Dow in the red, while the Nasdaq Composite closed at record highs, although all three posted gains for the week. All right, let's check out what's happening in London. Of course, Monday started with news that online retailers Boohoo and ASOS are swooping in on two of Britain's major high street brands. First up, Boohoo confirmed that it is snapping up the Debenhams brand in a £55 million deal that excludes the retailer's remaining stores, meaning they will be wound down once they are in a position to reopen. Now, some of ASOS put rumors to reset and said it was in exclusive talks with administrators of Arcadia Group to buy up the Topshop, Topman, Miss Selfridge and HIT brands. In the morning, the FTSE 100 was up 0.2%, while the more domestically focused FTSE 250 was up more than 0.5%. Let's check with Juliana for intraday market updates there. Hello, Juliana. Good afternoon. Well, Boohoo CEO John Little gave a presentation to analysts on the Debenhams deal. He seems to be leaving the door open for further deals as opportunities arise. How are investors reacting to this deal?
Good afternoon, Chimeze, from behind the scenes in the London studio. I've got to tell you, this deal represents a massive blow to the UK high street. Debenhams, believe it or not, has actually been in existence here in the UK for 242 years. And the fact that now Boohoo have managed to scoop it up for pretty much a cheap deal at £55 million, this is going to leave a massive gaping hole into the already beleaguered UK high street. This will see the closure of over 100 stores and, of course, over 10,000 job losses. For Boohoo, this is great. Their shares were trading up 4.4%. For them, this is a massive catch. They're now finally going to get into the pretty prestigious and lucrative beauty market. Although they won't be able to get any of Debenhams stock, just the name alone is massive. They get all of the intellectual property and the millions upon millions of customers in that database. So it definitely appears as if, you know, the old stock are getting out and you've got all these new kids on the fashion block getting in and making money on the top of it.
I see. Well, bring us up to speed with the market numbers this intraday, particularly as a British footwear brand, Dr. Martens, has said it is looking to raise up to £1.3 billion from its pending London listing as it plans to put 35% of its shares on the public market.
Well, yeah, the FTSE All-Share actually opened up pretty much flat as a pancake this morning, and at intraday, it is firmly in the red. I think the biggest, lifter, or shall I say, the one that's dragging the FTSE down at the moment has got to be the travel-related stocks. So much speculation here in the UK about what is going to happen in the borders. We already heard this morning that Israel decided to close their borders because they really want to protect and keep the trajectory positive of the inoculation, and that's what's happening here in the UK. We're really kind of being one of the world leaders in vaccinating the citizens, and I think the government want to make sure that this success continues to pan out. So I believe in early trading, IAG, International Airline Group, the owner of BA, they were down as much as 11%. So that's how worried the travel and leisure stocks are at the moment. When it comes to Dr. Martens, you know, they're having an absolutely amazing ride. Their owner, Primera, bought the British brand for £350 million just a couple of years ago. Now, according to Bloomberg, the initial public offering would value the company at 10 times that at about £3.75 billion. So this is a great day for them. This is the first big IPO that we're seeing on the LSE this year. And if the sources are correct, they should begin their trading next week, Tuesday, I believe, which is February the 2nd.
Yeah, Juliana, I just finished discussing the World Economic Forum with Ashutosh Shan. I was hoping to ask which of the UK authorities are attending this meeting, but I guess we really don't have much time to talk about that. But let's keep an eye on that meeting, and hopefully we talk about it tomorrow.
Thank you.
Right. Okay, we'll take a break, and then when we come back, we look at some of other developments here on the African continent. Just stay with us. And as one of the world's most traded metals, copper has surged to a 7-year high, leaving speculators debating if it was the signal to a healing economy. Now, prices for copper and other industrial metals are particularly sensitive to manufacturing activity in China because the country accounts for roughly half of global demand for copper and other materials. With Zambia and the Democratic Republic of Congo as the largest producers of copper, what will this price increase mean for the economies? Well, Matt Kindiger, an associate practice lead at Frontier View, has been following the trend in this metals market and joins us now. Hello, Matt. Good afternoon. Good to see you again.
Hello, good afternoon. Thank you for having me on the program.
Well, you've been following the trend on the metal market. Now, to what extent will the increase in copper prices over the last few months alter the economic outlooks for Democratic Republic of Congo and, of course, Zambia?
Yes, so certainly the increase in copper prices, metals prices, will have a beneficial effect for both economies, certainly support both their outlooks in 2021, but we do expect these two markets, these two crucial copper producers, to have quite different economic trajectories in 2021. We expect DRC to grow by about 2 or 3% this year, which is relatively good considering how bad the recession was last year. But in Zambia's case, we expect the economy to really struggle in 2021 again. We don't expect it to grow by more than 1%. And this is mainly because the government is facing quite a difficult fiscal position. And this does mean that even though copper prices are higher, copper revenues are higher for Zambia, they will be this year, public finances are still quite weak. The one thing, however, for both countries is that we do expect there to be more currency stability and lower inflation, partly as a result of improved copper revenues.
Now, DRC's President Felix Tshisekedi has been distancing himself from his predecessor, Joseph Kabila, most recently by ending a coalition with the Common Front for Congo. How will these political maneuvers affect the business landscape in the country?
These recent developments, I would say, are broadly positive from an investor perspective. I would also say that this recent development follows the Parliament's decision to remove a pro-Kabila speaker from Parliament. What it means is that it looks like the president is asserting himself a bit more than he was in the past. And related to this, which is a sign of improving standing of the president internationally, DRC was readmitted to the United States AGOA program, which provides preferential access for certain industries such as agriculture and textiles. So we could see broadly a sort of more pro-investment, more investor-friendly approach in Congo over the course of 2021 and the next couple of years.
And Zambia is going to the polls in August. Does the election present a risk to companies over the coming year?
Yes, so the election is scheduled for August, I believe, this year. There certainly is an increased risk of some form of social unrest. At the last election in 2016, there certainly was political unrest, and this cannot be ruled out again. We have seen a sort of a rising degree of repression in Zambia, more political tensions. And there is, however, I would say the biggest risk for businesses relating to higher risk, sort of higher uncertainty relating to the copper industry. And this is related to public finances as well, because recently Glencore, the big mining company, has decided to leave Zambia, but the Zambian government has taken on board a lot of debt in the mines previously owned by Glencore. So I would say the biggest risk for businesses in 2021 in Zambia really relates to public finances, which certainly are under considerable pressure at the moment.
Thank you very much, Matt. Always a pleasure to have you on the program. Do come again. Enjoy the rest of the day.
Thanks for having me. Cheers.
And the United Nations has warned that global foreign direct investment flows are set to go through a U-shaped recovery while staying weak in 2021. According to the UN Conference on Trade and Development, FDI collapsed last year by 42% to an estimated $859 billion from $1.5 trillion in 2019. Meanwhile, UNCTAD predicts a further drop of 5 to 10% this year as the world is still in the grip of the COVID-19 pandemic, which has escalated Overall, the global FDI is likely to follow a U-shaped recovery, unlike global trade and GDP, which have been predicted to be a V-shaped recovery starting already in 2021. And the United States will impose a ban on most non-U.S. citizens entering the country who have recently been in South Africa in a bid to contain the spread of a new variant of COVID-19. President Biden is also reimposing an entry ban on nearly all non-U.S. travelers who have been to Brazil, the United Kingdom, Ireland, and 26 countries in Europe that allow travel across open borders. The U.S. president is taking an aggressive approach to combating the spread of the virus after Trump rejected mandates sought by health agencies. The South African variant is 50% more infectious and has been detected in at least 20 countries. Still in South Africa, the breweries has announced its decision to suspend 550 temporary contract workers across its South African operations. The major brewery headquartered in Johannesburg says the ripple effect of South Africa's third alcohol ban is being felt throughout its beer value chain and that it's nearing its maximum storage capacity as its 9 brewing facility. In a statement released on Monday, the company says it will continue to reduce production levels as it navigates the unintended consequences of the prohibition. The lack of trade coupled with reduced storage capacity has led to a slowing down of production along with the uncertainty of the duration of the alcohol ban. The oil prices slipped for a second straight session in early trade today as renewed COVID-19 lockdowns raised fresh concerns about global fuel demand. Brent crude futures for March fell 0.3% to $55.26 a barrel, while U.S. West Texas Intermediate crude for March was at $52.19 a barrel, down 0.2%. Last Friday, prices came under pressure after data from the U.S. showed crude inventory surprisingly rose by 4.4 million barrels in the week to January the 15th versus expectations for a draw of 1.2 million barrels. Some support for prices has come in recent weeks from additional production cuts from the world's top exporter, Saudi Arabia. And gold prices gained earlier today as the dollar eased and hopes that a massive economic stimulus in the world's largest economy will be passed remained intact. Spot gold rose 0.1% to $1,854 per ounce, while U.S. gold futures eased 0.1% to $1,854.30. Among other precious metals, silver gained 0.7% to $25.58 an ounce. Platinum rose 0.1% to $1,099, and palladium added 0.1% to $2,354. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.